you all to yet another session of knowledge sharing today by Mehta Mehta. I greatly extend my welcome to you on my own behalf and as well as on behalf of Mehta Mehta. And today we are actually in the second seminar on this NBFC related issues, which we have planned to have about 4 sessions. Today we will be talking on corporate governance in internal audit. And today we have a very versatile panelist who has been actually well experienced in the NBFC companies. And we will definitely have his practical experience and the greater understanding from him. He is Mr. Shanmugasudaram, who is actually working as a Deputy Vice President and Secretary and Compliance Officer with Hinduja Leyland. Academically, he is holding a LLM law degree, and he is also a fellow member of our institute professionally. In addition to that, he is also a finance professional who has done his post-graduation in finance and management from Symbiosis Institute of Pune, very prominent management institute. In addition to that, he also holds the Indian Institute of Banking certified course, and he is also CA certified CS professional, and also he is also a insolvency professional. So many credits he has got. And second thing is, he has been actually in the auditing standard boards of the company secretaries of India. As at date, he is serving actually from 23 onwards. And now he has been also a post member in our own institute with the expert group of auditing standards in the past, and as well as secretarial standard board in the past. He is a very thought leader, and he has been writing various articles in the professional magazine, including our Chartered Secretary magazines, and he has been addressing various forums. He has been acting as a panelist in various compliances forum, etc., and addressing the corporate governance and the legal issues. Versatile personality, having more than about 2 decades of experience. I extend you hearty welcome to you, Mr. Shanmugasudaram.
Yeah, thank you for the kind introduction. Thank you so much. Looking forward.
I'm very much sure that your expert knowledge will benefit to our members today, and we will stand to gain value addition really in the NBFC related thing, which is really catching up nowadays. And coming to the RBI regulations, etc., which is becoming more and more stricter, and more regulations are coming, more and more expectations are expected from the company secretaries. I am very sure that you will definitely enlighten us on the various governance issues, etc., related to the NBFC. Over to Sudhakar, please.
Yeah. Good morning, everyone, and welcome, Sean, once again to our Mehta and Mehta webinar series. And you are the apt person, as Bala has rightly said, that because with your expertise, I'm sure that all the participants, as well as we ourselves at Mehta and Mehta, will get benefited. In fact, for 2 minutes, I will take a what's called as a diversion from the given topic, because recently I was addressing one program of the young professionals. In that young professionals, the usual things, which I was facing at the almost 4 decades before, that number one, the profession of company secretaries as such, and at the same point of time working for private limited companies. So I'm surprised to know that still people have a wrong notion or wrong thinking that working for a private limited company, company secretaries are like second-class citizens, which is not so according to me. So the young participants who are joined this webinar, please note that the private limited companies, public limited companies, listed, unlisted, at one point of time, the demarcation was there. Now it is more or less the demarcation, though it is there, but as far as the compliances are concerned, a little edge over each other. That's it. Otherwise, more or less, all the 80% of the compliances are the same, whether it is a private limited company or a public, listed, unlisted, whatever it is. Quite a number of times I have said this, the 3 main sections of Companies Act, that is section 135, section 90, and section 188. These are the most crucial sections according to me, because whenever the regulator comes for an inspection, he is going to focus upon the compliances of these sections. So these sections are applicable to private companies as well as to the public companies equally. So you as a company secretary has to be on your nerves as far as compliances of these three main sections are concerned. The others are all depending upon the corporate actions. And even if you are working for a public company, unless until a rights issue or a bonus issue or a public issue is there, or a private placement is there, you may not be dealing with 42 or 62. So many cases like that. Similarly, Secretarial Standard 1 and 2 are equally applicable to private companies as well as public companies, listed, unlisted companies. So compliances of secretarial standards are equally there. So you are a part of that also. Now come to the NBFCs. The moment your company is an NBFC company, whether it is a private company or a public company, depending upon the size of your whether it is a 500 crore or a 1,000 crore capital, this thing, there may be some kind of the compliance rigor will be a bit more or less. That's it. Otherwise, to a large extent, even NBFC compliances are the same. So my advice to all the young professionals is don't worry that you are working for private companies. Rather, let me put it this way, private companies are the places where you can show your exemplary abilities and you can set up the systems in place, which will be the foundation for you from where your professional journey can be started and initiated. So absolutely, there is no problem if any of you are having any kind of wrong notion or wrong thinking or wrong impression about this profession or working for a private limited company, please erase that thing from your memory. Be confident enough. This profession has a great future and working for private companies are going to establish the foundation stone as far as this is concerned. Coming back to the subject, we have already discussed about this. NBFCs, the compliances are, according to me, or if not much more, they're more or less equivalent to other compliances like whether it is a Companies Act or security laws. Because NBFCs compliances are having their own nuances. And even if it is a private company also, the corporate governance norms, which we are going to discuss today, are equally applicable to you. As I have mentioned upon, depending upon your size of your assets or size of your deposits, the compliance rigor may be a little different. So I will give a pause here and invite Sean. Sean, you also please express your views about what I have mentioned about this thing. Some kind of, the young professionals have some wrong notions. With your experience also, you may give some kind of what's called a wisdom words or a confident boosting words or whatever we may call it as. Thank you very much.
1 minute, Sudhakar. Let me take a few minutes before Shyam addresses the things. I would like to add what you have said actually. I have spent almost about 18 years with a listed company. And I have been doing the job. I was enjoying the job. Some of those 18 years in that company, I never received a single show cause notice, not even any non-compliances. And we were very proud to put in our balance sheet that we have never received any show cause notices, etc. and other thing and all. We have been following the second standard, cost accounting standards applicable to this company was covered under the cost accounting standards and of course the accounting standards, everything. But what has happened? So after that, I took up an overseas assignment for about 3-4 years and I went and the experience was altogether different. When I came back, around the age of 67, I joined a group of companies which were having, the mixture of private limited and unlisted public limited, including NBFC companies. What happens is, as you rightly say, there are a lot of things to learn in this private unlisted public company than what is to be learned in the listed company. In fact, the last 5 years of experience, what I had got, especially in the Vodafone group of companies and the private company, unlisted public company and NBFC company, has really, really added much more value than what I had given the experience in working about 18 years with the listed company. Because Sudhakar puts it very correctly, compliance is equally very important in these places. And another thing is there is no difference that it is less or more, etc. and other thing and all. Everything is applicable, as you rightly put in private companies. When the private companies come, per se, if you are not an NBFC company, in private company, there is no audit committee required, no nomination committee is required, nothing is required. But the moment you are the NBFC company, because of the RBI regulations, all the things becomes applicable. And again, what happens? You are again with the Companies Act, you have to comply with everything. You cannot escape mandatorily. Companies said, I am not covered under the audit committee or nomination committee. I don't know to comply. There is no escape on that. So this is the thing. Another thing is there much more than FCA and even the listing. The RBI is much more monitoring, demanding when it comes to compliances. Because they actually follow various issues. They actually write to you. They expect you to be very prompt within no time. All the things there, we are always on those. There are a lot more things to learn and get an experience in the private and unlisted public companies. That is based on my personal experience. Over to Shanmugasudaram, please.
Yeah, good morning to all. I completely agree with what Mr. Sudhakar and Mr. Bala has said. Every young professional has to make best use of the opportunity which they get. Actually, there is nothing like.
Sudhakar, your view about the subject on the topic?
Yeah, am I audible?
Shan, you're audible very much. Go ahead.
So every young professional has to make use of the best opportunity which is available to them. There is nothing like private company is inferior to a public company and all that. Whatever comes your way, make the best use of that. Actually, in over a period of time, you will still get into various different sizes of companies and all that. And one point I would like to add to what Mr. Sudhakar and Mr. Bala said is that when you are young, you please get into a lot of reading research activities. This first 5 to 8 years of your career is very, very important. You will have to spend a lot of time reading and doing research, writing some articles, or keep reading something. There are excellent books available on specific topics like company meetings, company directors, mergers, and all that. Though you may not handle everything in your work, but still it's important for you to keep reading all those kind of literature, so that it will give you a proper footing and stable grounding at the initial stages of your career, which will actually help at the later part of your career. If you don't do this in the very beginning of your career, then later part of your career, when you get into the leadership role, you will find a lot of difficulties, meeting the expectations of the regulators, your organization, your CEO or MD and the board. So this is very, very important. I keep saying to my team that after writing their exams and ultimately when they get their membership, it's a sense of great pride. Nothing wrong in that. I do appreciate that. You should feel proud about it. But please remember, when you get a membership in the institute, it's only a passport. You can't travel anywhere with that. Visa is something which you'll have to keep getting every year, every now and then, because that will only take you to places. So this is my short and comment on what Mr. Sudhakar and Mr. Bala said. I think we should go ahead and start the session, Sudhakar.
Yes, Rushabh. You can start sharing your screen and begin the presentation.
Yeah, before Rushabh, you start sharing your screen, just one more minute I will take that. What Shan has said is right, that in fact, of late, unfortunately, the what you said, Shan, is not there. In our days, especially, people may not like when somebody says in our days and all those things. They take, these old people have nothing other than giving lectures and all like this. But we used to crave for knowledge, that we used to have the hunger. Unfortunately, these days, what happened is so many diversions are there, especially because of the social media or whatever it may be. Everyone says that, sir, we don't have time. And the hunger for the knowledge is getting receded. Okay, this is what, in fact, when I was in Reliance, I used to hammer a lot. And this is off late I'm doing in Mehta and Mehta also. Sometimes, I feel that whether I'm overdoing it, I don't know really. Okay, but I'm still, as far as my appetite is concerned, for the hunger of the knowledge is still intact. It is not reduced. So what I'm trying to do is, I'm trying to spread this virus to the other people also, okay, so that they will also get this appetite, the increasing in appetite as far as the knowledge is concerned. Okay, this is, I'm sure that Bala, myself, and Shan, we all three are on the same page. And all the participants, our request, submission, advice, whatever you may take it as far as the terminology is concerned, please increase your appetite and your hunger for acquiring the knowledge. Because according to me, next 1.5 to 2 decades, India is going to have a very golden future. A lot of changes are going to come into the profession, whether it is subject knowledge or whether it is technical knowledge is concerned. And similarly, as far as your ability to interpret the laws and all, you have to increase it day by day. And competition is going to be the tough competition you have to face as far as the emerging professions are concerned. some new professions may emerge. Say for example, whether it is GST, arbitration, your insolvency laws, so many new areas are getting emerged. So it is all depends upon your ability to fight for and then to survive. So anyway, with this we can go on and on and on. And with this now, I think I'm inviting Rushabh. Please take us there with your presentation forward. Thank you.
Morning, everyone. First of all, I would like to thank Dipti ma'am, Ashwini ma'am, Sudhakar sir, Bala sir, Alifya ma'am for giving me this golden opportunity to express my views on today's topic. I would also like to thank Mr. C.S. Shan sir for giving your valuable time to this webinar. So I would also like to welcome all the participants who are present here to gain some knowledge regarding NBFC. So the focus of our today's topic will be NBFC Masterclass Series number 2, which will cover corporate governance and internal audit. In our previous session, we have covered the basics of NBFC. Now here, we would like to cover the corporate governance and internal audit. So should I proceed, sir?
Yeah, please.
So RBI, considering the public interest and effective corporate governance, issued directions relating to corporate governance directions 2015 by exercising their power under Section 45 of Reserve Bank of India Act 1934. So now let us understand the applicability of corporate governance directions 2015. So these directions are applicable to all non-deposit taking NBFCs having asset size of rupees 500 crore and above. Now here, for non-deposit taking NBFC, they have given the trigger limit of the asset size which is 500 crore. But for deposit accepting non-banking financial companies, there is no such trigger limit. So now let us talk about the non-applicability of corporate governance directions 2015. So these directions which the RBI have issued is not applicable to systematically important core investment company. So now let us understand what exactly the systematically important core investment company means. It is a kind of non-banking financial companies whose asset size is 100 crore and above. It also needs to fulfill some of the additional condition, means that is it should be engaged in the business of acquisition of shares and securities, but it should hold not less than 90% of its net asset in the form of equity shares, preference shares, etc. in its group company. Along with that, its investment in the equity shares should be at least 60% of its entire investment in the net assets. Moreover, it should also not trade in its investment which it had made in the form of shares, bonds, debentures, except for the purpose of disinvestment. So now let us talk about the constitution of committees of board under the NBFC. So they have given mandatory 3 committees to be formed for the NBFC. They are Audit Committee, Nomination and Remuneration Committee, and Risk Management Company. So for all these committees, they have to follow as per the Companies Act 2013 only. So for Audit Committee, minimum there should be 3 directors with majority forming independent directors, and one among them should be expertise in understanding and reading the financial statements. So all its composition, power, functions and duties are regulated as per Section 177 of Companies Act 2013. Audit company's one important role under NBFC is to ensure that the NBFC carries on information system audit twice a year. So what does exactly information system audit means? It is the process of evaluating, verifying and rectifying the information system which the company actually follows. Now let us talk about a second committee, which is Nomination and Remuneration Committee. So one of the major function of Nomination and Remuneration Committee is to look behind the fit and proper status of proposed or existing directors which the NBFC proposed to appoint. So we will study this fit and proper status of proposed existing directors, what it is exactly, in the next slides. So composition, power, functions and duties of Nomination and Remuneration Committee are as per Section 178 of Companies Act 2013. So our third mandatory committee under NBFC is Risk Management Company. So one of the major function of the Risk Management Committee is to manage the integrated risk of the NBFC and what risk the NBFC is expected to arise in the future to look towards it.
Here, when it comes to this here, one thing which comes to the thing, when you talk about the Risk Management Committee, it is basically Asset and Liability Risk Management Committee, which is specified for the NBFC companies, which has got the different terms of conditions, etc. What we understand in the other listed companies. That is number one. Number two is as per the Audit Committee and Nomination Committee is concerned under the Companies Act. If it's a private company, these provisions are not applicable. But the moment a private company is registered as a NBFC company, then all these provisions becomes applicable as pointed out by Rushabh. All these Companies Act provision like section 177, 178, etc. is equally applicable in the private limited company. So there is no question of private limited companies stating that it is not applicable, mandatory, no audit committee, nomination committee. No, the moment it is NBFC, by virtue of the RBI regulation, it becomes automatically applicable. Yes, Shanmugam, please.
Yeah, I'll just quickly take you through the perspective of RBI and all these committees. Audit committee is one of the important committees from the RBI standpoint because they review the financial statements of the company as well as the internal controls and internal financial controls. RBI is, sees the audit committee as a very important committee. So they in fact, have a meeting with the audit committee chair during the inspection process. So they also expect the internal auditor to have a separate meeting with the independent directors without the management's presence. So that is the extent of importance given to the audit committee by the RBI. Similarly, nomination and remuneration committee is a very important committee in terms of the governance and succession planning. Any director who is brought on board, there is a specific fit and proper criteria which the nomination and remuneration committee is expected to examine, evaluate, and then satisfy itself that this proposed director is conforming to the status of all the fit and proper criteria given under the RBI direction, and then only make its recommendations to the board. So that is the expectation of RBI in terms of NRC, and RBI also expects NRC to actively involved in the succession planning of the senior management and the top level board level succession planning. In terms of risk committee, as Mr. Bala said, risk committee is also one of the important committees. There is another committee called Asset Liability Management Committee, which takes care of the asset liability mismatch, asset liability profile and all that. In terms of risk management committee, they basically, their terms of reference would include to evaluate the credit risks of the company. Credit risk basically means the risk arising out of the credit given by the NBFC to various customers. Then the liquidity risk, how far the company's liquidity position is comfortable. That is something which they get into risk management committee. And they also get into the operational and business risks review, wherein these kind of risks, whether the proper mitigation aspects are in place is what they look at it actually. And in terms of the information systems audit, there is another separate circular issued by RBI in June 2017. Which says that this IS audit has to be conducted once in a year and the report has to be placed with the audit committee. So the audit committee usually during the annual accounts meeting reviews the IS audit report, and the IT strategy committee, which is to be formed as per the master directions on IT, that also has to review the IS audit report post the review of audit committee. That is the practice which is followed by most of the NBFCs. Go ahead.
Shan, you may clarify also that whether every NBFC committee has to constitute these committees or only some NBFC companies have to constitute?
No, this audit committee, NRC risk management, most of the NBFCs have to this one constitute. And in terms of this IT strategy committee also, NBFCs with asset size more than 500 crore, they have to constitute. Yeah, go ahead, Rushabh.
So now let us understand the fit and proper criteria. So in this fit and proper criteria, first the director has to obtain a deed covenant signed by director, means he has to submit a deed covenant which will contain some of the covenants towards NBFC. So for this fit and proper policy should be formulated with the approval of board of directors, and the NBFC need to obtain declarations and undertakings from the proposed directors and along with the existing directors. NBFC also need to furnish a quarterly statement on change of directors and a certificate from managing director that the fit and proper criteria has been followed effectively by the NBFC. This quarterly statement of change of directors has to be submitted within 15 days from end of each quarter.
The statement of change in directors, quarterly it is certified by the MD and annually we need to get it certified by the statutory auditors also.
So that means, if there is no change, you have to mention that there is no change in the directors during the quarter, and that is to be certified by the MD.
Whether there is a change or not, whatever is the factual position as on the quarter end, you will have to submit. And then when you submit it for the year end, that is March quarter, that will be certified by the statutory auditors also.
Okay.
So now let us understand what are the major contents of fit and proper criteria which the NBFC needs to follow. First one will include the personal details of director. It means its age, birth, educational qualification, expertise. Second one is relevant relationship of director. It means a list of relatives, if any, who are connected with the NBFCs. Second, it should include that list of entities, if any, in which he or she is considered as being interested. Other thing also need to include is that list of entities in which he or she is holding substantial interest. So now third one is record of professional achievement. Whatever the professional achievements the proposed director has achieved, he needs to disclose in this under this head, which is record of professional achievement. The fourth one is proceedings, if any, against the director. It means if the director has received any adverse notice of SEBI, IRDA, MCA, he needs to disclose that. Also, if any criminal prosecution is pending or has been instituted against the proposed director, he needs to also disclose that. Along with that, whether the director is disqualified under Section 164 of Companies Act 2013 or not, also needs to be disclosed in that. And the last one is any other additional information, if any, means whatever additional information the proposed director needs to specify, he can add that.
Yeah, this fit and proper criteria evaluation is required at the time of appointment as well as, at the time of, renewal of appointment actually. And whenever the RBI, issues a certificate of registration for an NBFC, for a new NBFC, they also evaluate this, the director's background and all that, and accordingly only they issue the certificate of registration. Suppose the issuance of certificate of registration also, RBI is very particular that this evaluation of the director's fit and proper criteria is done on an annual basis. That is the reason this is, forming part of the RBI master direction, so that the company board does a due diligence every year whether the director is fit and proper to continue as a director. So the NRC, as I said earlier, the NRC plays a very crucial role in evaluating this fit and proper criteria and then making it, its recommendations to the board. This applies to the new appointments as well as director retiring by rotation, or in between any new appointments of directors take place. That also, for that also this applies actually. Yeah, go ahead, Rushabh.
Even here, the disclosure norm, which is actually demanded by a RBI, is much greater than what it was actually demanded in the company side.
Yeah. This is different from MBP1 actually.
Yeah,
correct.
In fact, they have to actually give. So as per there is a prudential norm has been actually issued by the master circular by the RBI. Under that norm, they have to actually give the list of entities according to that prudential norm. Then they are deemed to hold the major stake or something like that. So that sort of the list he has to actually give. And similarly, he has to also give the list of entities of the listed companies where they are holding the stake, etc. That also have to give. In addition to that, he is also supposed to give in various NBFC companies where he is in serving, including the tenure of service. Those details are required. So the disclosure requirement which is demanded by the RBI is actually very great. Yeah.
And in terms of this directorship ceilings also, the scale-based regulatory framework has introduced new restrictions like a person who's a director in an NBFC cannot be director in more than 3 NBFCs, which is a middle layer NBFC or an upper layer.
That is the purpose why that disclosure required. And not only that, one more thing is there, if director is actually availing any fund-based or non-fund-based facilities, even that is also to be disclosed actually.
Correct.
Yeah, it's a much.
I think, Sean, that every year the director has to give the affirmation that he satisfies the fit and proper criteria.
Yeah, every year they have to give. Not only that, any change is there that he has to give, and again in turn it has to be informed to the RBI as well in the beginning of the year.
Similar to the annual disclosures we get it under the companies.
But here only thing is what happens is when they give that, the responsibility cost of the nomination remuneration committee to evaluate the things. That is another issue which is there, because it is not that disclosure just received and we inform to the RBI or something like that. The moment this is received, we have to place it to the nomination remuneration committee, and they will actually evaluate, and they will actually say yes, okay. So then only it can go actually. In fact, when we are informing to the RBI, we'll have to actually say it has been already considered by this committee and it is found proper. That sort of a certification we'll have to give.
Correct. In fact, the fit and proper criteria is signed by the director and also by the NRC chairperson. Countersigned by the NRC chairperson, confirming that it is the confirmation that NRC has properly examined the submission by the director and evaluated and accepted the same.
Yeah, that is it.
Okay.
That is what I was saying, Sudhakar, in the beginning. The later 5 years of the part, my working with the private unregistered company has added much more value than what I served in the listed company.
Right.
Yeah, go ahead. Rushabh.
Now let us talk about selection of directors. What procedure actually the NBFC follows in appointment of director. First of all, they conduct due diligence to determine suitable candidate for the appointment based upon their qualification, experience, track record, etc. Thereafter, NBFC need to obtain declaration from the proposed or existing directors. Thereafter, nomination and remuneration committee will scrutinize the declaration which the proposed or existing directors had given. Based on the information provided in the declaration, nomination and remuneration committee decides on the acceptance or otherwise rejection as it deems fit. These all existing directors also need to submit annual declaration that the information which they have submitted in the declaration does not undergone any change.
John, here I would like to ask you one question, that no doubt about it, everybody knows everything and we don't know anything. Like conduct due diligence to determine a suitable candidate for the appointment based upon qualification, experience, track record, etc. But though it is the responsibility of the NRC committee primarily, but it is most of the times it is the company secretary who assists the NRC.
Correct.
I'm sure with your experience in Hinduja finance and prior to that also, what actually the company secretary, what kind of a role he has to play in this particular scenario? Can you please advise our participants on that?
Yeah. See, especially when a new director is appointed, when you get this fit and proper criteria declaration from him, you will have to ensure that whatever information he is providing is authentic and valid. And we also go to the extent of getting the validation documents. For example, a director says that he's worked in certain companies in certain position over the period of some years. We also validate that by checking the publicly available information. Also, in case we are not able to get that, we do take it from the directors itself. That is one. And again, in terms of qualifications, also the due diligence requires that you have all the testimonials in place. So that is the kind of extent of detailing we get into. And once you are satisfied with all that, then only we will forward it to the nomination and remuneration committee. As you rightly said, these kind of basic diligence and in terms of validating the declaration, it is completely the role of the company secretary, whom the NRC is dependent upon. So basis your recommendation or basis your submission only, the NRC will consider the declaration and then evaluate, and probably sometimes they may seek further queries to the company secretary also, and accordingly only they will approve and recommend it to the board.
So Sean, what is the difference between when you are selecting a director for a normal company? That time also all these things we do it and we assist NRC committee for under 178. So what is the difference between when you select a director or when you recommend a director to the NRC and normal company and NBFC in particular?
See,
what
NBFC,
you look exactly?
NBFC, for example, in case of some of the NBFC, there is no prior approval of RBI is required. Only when there is a 33% change in the board composition, then there is a prior approval of RBI itself is required to appoint any director, whether it's independent or whether it is non-independent. And again, in terms of difference between the Companies Act and the NBFC is that unlike the Companies Act, where it's more of an internal review, it's more of a audit review, both secretarial and statutory audit review. MCA review comes only at the time of inspection, whereas in case of NBFC, it is subject to annual inspection. And as and when you appoint a director, you also make a disclosure to the RBI with all the data and relating to the director. At that time also they come back with queries, they come back with they ask you a few other details pertaining to the director. And especially if the director is also a director in any other NBFCs, RBI will also have some prior knowledge about the person as to how he has performed, how he has worked in the other company, how that company was, and all that. So that also, to an extent, gives some insights to the RBI. And especially if the person is a director in any other NBFC or a bank, the RBI also, as a part of the fit and proper criteria, it also requires whether that company has defaulted in any of the credit facilities it has obtained, or whether the director himself has obtained any non-fund based facilities, whether he has defaulted. So they look at the financial integrity of not only himself, but also the other companies in which he has worked. I'm sure that from the Companies Act point of view also, these aspects should be looked at, but that is not more pronounced there in terms of in an express way, whereas it is more pronounced here in an express manner in the fit and proper criteria.
Well, in fact, you are touching one subject, that if there is a change in the more than 1/3 of the size of the board or 33%, when there is a change in the directors, you have to have the prior approval of RBI before appointing the directors or replacing those directors. Am I correct?
Yeah.
Last week also we touched this subject, but we haven't got in-depth discussion. But what I'm trying to say is, for example, if an NBFC company, which is a limited company, having 3 directors, now one director resigned or ceased to be a director, or he expired, whatever has happened now. That amounts to definitely 1/3 of the size of the board or 33%.
Correct.
Now I cannot appoint a director until I have the RBI prior approval for that to replace that particular position. Now RBI sometimes they may take their own sweet time. We don't know that when they may not give the approval immediately. So I may be having a non-compliance till the time RBI gives me that approval. What is your advice? How the companies have to deal with that kind of a situation?
In our case, recently we did it for one of our subsidiary where there was a change in management, and we are able to get the approval within a 3-week span of time. Okay. Ideally, what the company should do is that the moment they feel, if they can anticipate, they can prepare well in advance, or if it is sudden change, they need to first understand what are the requirements to be submitted to RBI for getting the approval. For example, they ask for the banker's report of the director, which might entail some time. And they ask for some basic particulars which the company will be able to give. Apart from the banker's report and CIBIL report is something which is external. That is, you will have to spend some time to get that. So if one can plan these things in advance, it becomes, easy to get and, get the approval on time. It usually takes about 2 to 3 weeks if you can give all the documents in on time, actually.
That's the minimum.
If there is a delay, the only way you will have to address the MCA requirement is that probably you'll have to attach the RBI approval letter saying that we are bound by a sectoral regulator approval and hence the delay. That is what we can say at the most.
Somebody asked me a question, what is the banker's report, Shan?
Banker's report is basically, they give it in a sealed cover. We also don't get into the contents of the report because that is given directly to the RBI. It basically talks about, the account holder with the bank, what is his basic KYC details, and
maybe he's a defaulter or he's a defaulter in any way.
Negative, remarks from the bank that is mentioned, or otherwise, his credit standing is mentioned. That's all. Nothing very detailed actually, but it's a very basic information from the bank. Actually,
we really don't know, Sudhakar. In fact, in the past we also experienced like this. They give in the sealed, we just hand over to the RBI.
So in fact, Shan, to avoid this kind of a stuck situation, what one can do is always to have one more director wherever possible. So that you will not have this kind of a situation, because in one of the companies, when we face the situation, that after that we learned the lesson in a harder way, that because that RBI approval was not coming, they started asking so many questions, because in our case, what happened is the NBFCs, the asset size was more than 5,000 crores. So with that, what happened is, though it was actually a closely held company, obviously it is a Reliance Group company, it is all doing within the house only. But considering the size of that, the RBI took a bit more time, and we got stuck with the situation that we are having only 2 directors. So then we learned that thing in the hard way, and what we decided was it is always better to have one more director so that you will not have this kind of a problem. And similarly, as you rightly said, whenever you are visualizing that someone's tenure is going to be over or something like that, be proactive and appoint a director beforehand, so
Correct.
that you will not get into that situation of more than 1/3 board change, something like that.
Yeah, the company secretary has to do a quarterly review of the board composition and try to have a stimulated scenarios, where if there will be a change, how it will pan out, and accordingly he can anticipate and, probably, keep the chairman and the board informed that if this happens, this will be the consequence and all that. So
So
that
they have to sensitize the management much in advance, so that you will avoid this kind of situations.
correct.
Good.
But one more point I would like to stress is here that in a situation where you will have to go to the RBI for approval, I would suggest that you need to keep constantly engaged with the RBI. You probably have to meet them in person so that, you can speed up the things. That way, I think it will help a little bit more.
Right.
In fact, Sudhakar, where I was working with the Vodafone Group companies, as you rightly said, they always had more than the statutory minimum requirement directors, so they never faced this situation. But another thing is that whenever the things have come like that, in fact, our experience was also with RBI. We did not get like you experience a delayed period, etc. We got in a reasonable time the approval. That is one. And second thing is that this company, when you are talking about the company secretaries, assisting the nomination committee in the selection of the director, etc. This company actually had a fit and proper criteria policy formulated. That policy contained various things. What is the expectation, etc. One of the things were especially, various legal proceeding, litigation, etc. And other things are all conflict of the interest, other NBFC related matters issue. We used to run a check externally on these issues and other things and all, whatever the available information. And specifically, we used to check up with the director, counsel, what are the issues, anything is there and other things and all. Then we used to give a feedback. The policy was in place actually, which was actually helping us, to generate a checklist and work on that. I think Shanmugam also might be having a fit and proper criteria policy in their company, I believe.
Yeah, Rushabh.
So, director covenant with NBFC. This means what responsibilities the director has towards the NBFC, which he undertakes at the time of appointment. So, first one is the director shall disclose nature of his or her interest in any of the contract agreement. Means whenever any of the contract or agreement which the NBFC is proposed to enter, the director needs to disclose his interest, if any he has, in the first board meeting where this point is taken for discussion. Also, director needs to disclose his directorship, membership in other body corporate, along with if any change happens in such directorship or membership. Also, he needs to disclose the list of relatives defined under Companies Act 2013. So, now the director shall, in carrying on his or her duties as director of NBFC, also adhere to some of the following requirements. He needs to perform the duties with required degree of skills and in good faith. He also needs to attend meetings of the board and committees in which he is a member. Director need not to influence decision for any consideration other than in the interest of the NBFC. Means he should not be unbiased. He should not be biased. Director shall have fiduciary duty to act in good faith and interest of the NBFC. His duty is to act within the powers as per Memorandum of Association and Articles of Association which the NBFC has framed. He also needs to acquire a proper understanding of the business which the NBFC undertakes.
This is something similar to the, the Code of Independent Directors provided under the Companies Act. And in terms of NBFC, they have given some certain specific things, which the director has to adhere actually. And the deed of covenants also, prescribes about what the NBFC should do to the board members, what all things apprise to the director. Is there a slide on that, Rishabh?
Yes, sir. Yes, sir. I have taken it. So now this is NBFC covenant with the director.
One minute. So that Shan, I can take this thing as if these are the basically covenants from the director. Doesn't I mean nothing but the affirmations what the director is giving to the company. Am I correct?
Yes.
So based on that, that means that the company is relying on the affirmations being given by the director or by the covenants, we may call it as, and based upon that, the company is acting. Tomorrow, if anything is going wrong or a wrong covenant or a wrong affirmations, the director will be held responsible for that.
Yeah, not only from the standpoint of the company, even something goes wrong in the company tomorrow, RBI can rely on these covenants and say to the director that you are contracted to do all these things, and if he has not done any of those things, the RBI can also proceed against him.
Okay. Fine.
In fact, in the Companies Act, we issue the appointment letter to the directors. But here what happened, the contrary, the director signed these covenants and he hands over the thing to the company. In turn, company actually countersigns and they give a copy to him.
Correct, correct.
Okay.
So in the previous slide, we had covered what responsibilities the director has towards NBFC. Now here we will cover what NBFC owes towards the directors. So non-banking financial companies shall appraise the board with regards to its legal and other duties, remuneration policy which the NBFC has framed, etc. So there are also some of the disclosures which need to be made by NBFC at periodic intervals, which includes NBFC strategies and business plan, the organizational structure, economic features and marketing environment, information and updates on some of the major capital expenditure. This is the illustrative list of the disclosures that NBFC need to make. Third one is NBFC shall also communicate outcome of board deliberations to directors and prepare and circulate minutes of the meeting of board of directors in a timely manner and to the extent possible within 2 business days of the date of conclusion of the board meeting.
In fact, Shan, that the good part here, what I'm observing is that in case of NBFC companies, even the NBFC company also has to give certain affirmations to the director.
Yes, yes, it is a bilateral covenant basically.
Yeah, bilateral thing. And number one, number two, in the normal companies, the companies are not under an obligation to give anything to the director as such. So it is presumed that the management will keep the director posted and all those things. Whereas here, it is a legal obligation. That they can suppose that the company has to say information and updates on major capital expenditure, economic features and market environment, organizational structure, NBFC strategy and business. This is company is under obligation to inform the directors and all these things legally.
Yeah.
Which is not the case other than NBFC. Under the company side, there is no such legal obligations as such on the company side.
Correct, correct. Even from the independent director point of view, he can see it as a contract, wherein the company is obligated to give. If the company doesn't give, he can sign the contract and still demand. And one of my suggestion would be like how the company will monitor that these things are provided to these information data are provided to the board members is that probably on a quarterly basis. See, you will not be giving the specific information at a specific date. Actually, over a period of time, as a part of the agenda, as a part of the circulation, various circulations to the board, it may be through a newsletter, it may be through a budget plan meeting, it may be through other non-board meetings or committee meetings. You will be providing a lot of information to the board. So you should actually do a quarterly review of of these contents, what all to be given, and map it with whatever you have given at different points of time, so that you can be satisfied that whatever the NBFC has to apprise to the board members has been duly apprised to, so that at the year end you can look at all the 4 quarters and satisfy yourself all these aspects which you are supposed to give it to the director is actually given to them.
And the good thing also I like to share here is that you are aware that you are there and the SSB also that time when we were drafting the SS1 standard. Within 15 days, the draft minutes are to be circulated, and most of the company secretaries were finding it difficult, within 15 days, how can we draft it and all? Now here you say that it should be made to the extent possible within 2 days, 2 business working days. From the date of the conclusion of the meeting, the draft minutes are to be circulated.
Yeah, the one reason could be for these 2 business days could be in case of an NBFC. Some of the credit proposals, see, generally a credit proposal, that is a loan proposal, is delegated in an NBFC, either to the managing director or to a committee of directors like credit committee. In some cases, the powers are up to a certain limit. When it goes beyond a certain value, it goes to the board per se. So that will be very high value transaction. Probably with that in mind, or some of the critical decisions in mind, RBI might have told that you should try to endeavor to circulate the minutes in 2 business days, so that the decision before it is getting acted upon, if the directors have something to say, they can give their feedback.
So in fact, I remember at one point of time, one of the very senior SEBI official in one of the forums, he said that In fact, I asked him one question that why there is a disparity between the Companies Act and the SEBI listing regulations, because SEBI listing regulations are always on the higher pedestal than in the Companies Act. So that gentleman has answered me in this way by that the moment you started handling public funds, okay, so the rigor of compliances always should be more than in the normal companies, which is rightly so. Also, I agree with him. Now, might be, even in case of this RBI regulations as far as the NBFC companies are concerned, because every NBFC company is concerned more or less dealing with finance. The moment you started dealing with finances, one has to be, the integrity, your governance norms and compliances, procedures, policies should be very, very strict. There should be stringence should be there. Otherwise, if you say everything on Ram Bharose, then obviously that the company will be in trouble. Certainly, that might be one of the reasons.
The source of funds is only public funds, either to the bank term loans, bank lines, or from the NCDs and the markets. It's all public funds again.
In fact, in one of the forums, this question was there. Despite the stringentness, we have the Malyas, Nirav Modis, etc. I said, look, because of the stringency, only you can name 2-3 people at the most, or maybe 5-10 people. Had that stringency not there, they may be in hundreds.
Correct.
If not thousands. Yeah,
but some or other on this particular issue, in practice, I think all the companies are following the SS1 standards, and I don't think any RBI has raised any adverse remark or objection on any issue on this matter actually. And I think we have been actually following the SS1 applicability in this case. Yeah.
But when they come for inspection, they do review the SS1 compliance. Actually.
Yeah. I was about to say that.
Whether you have circulated the minutes, whether you have issued the certificate copy, whether your agenda has been sent on time, they are well aware of the SS1 provision.
Yeah, that is right. That is right. They also verify like that only.
Correct.
Yeah.
Rushabh, go ahead.
Yeah. So recently, on April 19, 2022, RBI issued a circular for loans and advances which the NBFC grants. So this circular is applicable only to the NBFCs which are in the middle layer and upper layer.
This is applicable from October 1, 2022, though the circular was issued on April. They have given about 6 months times to adapt, basically.
Yes. So loans and advances to the directors. So unless sanctioned by Board of Directors or Committee of Directors, NBFC shall not grant loans and advances aggregating to ₹5 crore and above to their directors or relative of the directors. Any firm in which any of their directors or relative is interested or is manager, employer or guarantor. But the proposal for credit facilities for an amount less than 5 crore may be sanctioned by the appropriate authority in the NBFC under powers vested in such authority, but it shall be reported periodically to the board.
Yeah, up to more than 5 crores, you need to take the board approval, and less than 5 crores, it has to be reported to the board. Yeah, similarly, the loans and advances to any senior officers. Yeah, go ahead, Rishabh. You are about to go.
Now, loans and advances to the senior officer. So, while giving loans and advances to the senior officers of the NBFC need to abide by the following conditions. Such loans and advances sanctioned to the senior officer and NBFC shall be reported to the board. And no senior officer or any committee comprising a senior officer as a member, while exercising powers of sanction of any credit facility, sanction any credit facility to relative of that senior officer. Means he should not allow conflict of interest in this case. Now, loans and advances to real estate sector. NBFC to ensure that borrowers have obtained prior permission from government, local government, statutory authority for the project where required. This disbursement shall be made only after the borrower has obtained requisite clearance from the aforesaid authorities. Means in the case of real estate sector, while granting the loans and advances to real estate sector, there is clear watch of RBI. Like they need prior approval of government statutory authority before disbursement of the loans.
Yeah, go ahead, Rishabh.
So now let us understand what exactly means the NBFCs in the upper layer.
Rishabh, one moment. Just go back to the earlier slide. Yeah, this loans and advances, the guidelines also stipulate this provisions relating to loans and advances to the board members as well as the directors and the senior officers and to the real estate sector. It equally applies to the awarding of contracts also. The reason for having these words awarding of contracts is that the companies should not circumvent the provisions. Instead of giving a loan, you take them as a vendor or make them a service provider and you avoid contracts to them. That is also considered as a kind of financial assistance given to the such person. That's the reason they have used the word. You will equally apply to the awarding of contracts also. So not only from the company secretary point of view, in terms of due diligence as to how you report on this to the board on a quarterly basis. Initially, one of the ways of reporting this is to get a data from the finance department as well as from the HR department in terms of any loans granted to the senior officers as well as the directors, because these two functions will be able to give you some data on that. Similarly, we'll have to also keep track from the business and operations team in terms of contracts, whether any contracts have been awarded to the entities or directors interested or relatives in relatives of directors. All those things. Yeah.
So NBFCs in the upper layer. The upper layer shall complete of those NBFCs which are specifically identified by Reserve Bank of India as warranting enhanced regulatory requirement based on some of the parameters and scoring methodology which the RBI follows. But the top 10 NBFCs in their asset size shall always reside in the upper layer, irrespective of any of the other factors. RBI have identified the following NBFCs as NBFCs in the upper layer, white circular dated September 30, 2022. So they have given the list of NBFCs which falls under upper layer. These are some of the NBFCs which fall under the upper layer.
So these upper NBFCs in their upper layer are subject to stringent regulations, and the inspection purview of RBI will almost be concurrent actually. Even for middle layer NBFCs, they keep asking data on a regular, on a weekly or once or twice in a week. And in terms of upper layer, it will be much more stringent in terms of the monitoring of RBI.
So now let us talk about NBFCs in the middle layer. The middle layer shall consist of all deposit taking NBFC irrespective of their asset size. Non-deposit taking NBFCs with an asset size of rupees 1000 crore and above. NBFCs undertaking the following activities: standalone primary dealers, infrastructure debt fund, core investment companies, housing finance companies, infrastructure finance companies. Now let us talk about disclosure and transparency, which the NBFC need to disclose to the board of directors and also in the annual financial statements. So NBFC need to periodically disclose risk management policy and strategy followed by the NBFC. Conformity with corporate governance standards, that is composition of board of directors, audit committee, nomination committee, etc. Likewise, NBFC also need to disclose some of the mandatory things in the annual financial statements, which includes rating assets assigned by credit rating agencies, penalties levied if any, registration, license, authorization, area, country of operation, joint venture, asset liability profile.
See, the annual financial statements, one of the important disclosure is also that you need to give the details of non-compliance with the requirements of the Companies Act, including compliance with the Ind AS as well as secretarial standards, as well as the penalties or strictures imposed on it by RBI or any other statutory authority. So it's good to see that they have also covered the secretarial standard compliance and disclosure of that in the as a part of your annual report. Yeah, go ahead, Rushabh.
But even the Companies Act also, there is a mandatory provision is there in the board report has to categorically give affirmation that the company has been actually followed the secretarial standard which is applicable.
Correct.
Even applicable for all the companies as well. which is re-emphasized in the NBFCs again.
Yes, yes. So RBI is, aware of, what the institute is doing actually. They are keeping track of, institute's activities and initiatives, and they are, trying to leverage that.
No, in RBI inspection comes, they actually go by the Companies Act provision as well as the sectoral standard provision. They check various secretarial records which refer to the sectoral standard. As per when it comes to the release of the agenda, draft circular of the minutes, approval of the minutes, etc., and other thing and all, they check with the reference to the sectoral standard. That is the experience.
Right.
Now, additional disclosure requirement in annual financial statements of NBFCs in middle and upper layer. This RBI has issued circular on April 19, 2022. This is applicable only to NBFCs which are in the middle and upper layer. Corporate governance. For listed NBFCs, disclosures to be made as per SEBI listing obligation and disclosure requirement regulations 2015. But for non-listed NBFCs, they should follow some minimum disclosures which is required to be made, which includes composition of board, committees of the board and their composition, general body meetings, details of non-compliance with the requirements of Companies Act 2013, details of penalties, if any, levied by any of the statutory or regulatory authority. Thereafter, breach of covenant, diversion in asset classification and provisioning.
So these guidelines also say that in case of a listed company, they will also follow the SEBI LODR requirements in terms of the disclosures in the annual report.
So now
Can we see before that any questions are there in the chat box? I can see some of the things.
Yeah, some questions are there.
Yeah, they are asking you, can you please advise the latest book on NBFC compliances?
So there is no specific latest book on the NBFC compliance. There is one taxman publication which you can refer to, but one has to keep track of the RBI website because like SEBI, RBI is also very active, keep on issuing various circulars and guidelines actually. I would say that, there is one master direction issued in September 2015, which is updated recently also. That will be the base document. After that, there is one SBR circular scale-based regulatory framework issued in sometime October 2021. So under that, various regulations have been issued, like guidelines on appointment of auditors and loans to the directors and all that. So all these have to be, tracked. It's slightly, tracking these RBI circulars is slightly different from SEBI, where I feel, in SEBI there is a mother regulation LODR under which various circulars issued, whereas in RBI, in case of RBI, it is much more, scattered and, granular actually. So one needs to be very attentive and, meticulous in keeping track of these circulars. The taxman book would come handy, but again, the law regulations and guidelines keep changing every now and then. So even if you're having that book as the base, after that, from there on, you will still have to keep tracking the RBI website for the updates.
What is the bankers?
Unlike Companies Act, we don't have any book as far as commentary is there or something like that for NBFCs. As Sean, you rightly said that taxman book is the only one which you can refer to.
I will also give the verbatim of what is given in the guidelines.
Yeah, absolutely. So that's why it is always better these days, especially when so many changes are happening so frequently. Better to depend upon always on the website of the respective regulators. And the good part with RBI is they come with the master directions yearly once they update it, so that you don't need to worry as far as the previous circulars and all are concerned. Correct. Of course, though they are not withdrawing that, but the master circular, if you follow that to a large extent, you are safe in. Safe in whether it is prudential norms, whether it is corporate governance norms. Whatever it is and all that. RBI is coming with master directions, and every year, if I am not wrong, mostly July, they come with this updation of the master regulations.
Yeah. In addition to the circulars applicable to NBFCs, sometimes you will also have to be aware of the circulars issued to banks. To quote an instance, actually, one of the circulars issued to the banks, the RBI has said some of the limits or funding lines which the banks gives to NBFCs are put to certain end-use restriction. in their onward lending. So as an NBFC, unless you know that what restrictions has been put on the bank, you will not be able to understand whether you can utilize the bank funding for a specific end use or further on lending. So in a certain way, you will have to also keep track of some of the circulars issued to the banks.
What is the bankers report? From where we can avail the bankers report?
Bankers report is which you will have to request to the concerned bank. If sometimes if the company acquires another company, that RBI during the application process asks for the bankers report of the company as well as the directors of the company. You will have to make a request to the respective bank, that is the company's bankers as well as the bank in which the directors have their account. So from there you will get the report, and it is usually given in a sealed cover, which you will make an onward submission to the RBI.
What if a private company is not having the independent director at this point of time and less than 50 crores criteria? In that case, having an audit committee and the nomination remuneration case is practically not possible.
In fact, this 50 crores thing, from where it has come, I have no clue about it.
Yeah, 50 crores, I am also not aware.
Because this committee constitution is compulsory for every NBFC company.
Right.
And as far as that appointment of, say that, whether appointment of independent directors requires under the Companies Act or not, that is immaterial. But if you have to constitute the audit committee under the provisions of 177, and if it is under the provisions of 177, majority of the committee members are to be independent directors, you have to appoint them. So whether, that the complaints under the Companies Act may be different to that of what RBI requirements are there. So whichever is on the higher pedestal, always we say that whichever the regulators' requirements on the higher pedestal, you have to comply with that.
Yeah, Companies
so in
Act
this case, for example,
Companies Act cannot dilute the requirements under the RBI guidelines.
Exactly. Say, for example, in your case, it is a private company and it is a NBFC company, and obviously you have to comply with the constitution of the committees. And instead of giving separate directions, what they said is that whatever the Companies Act requirements are there, ditto that you have to comply with that. So even if you are a private company and the constitutional committees are not applicable to you, and similarly, even if it is not, your company is not a private company but an unlisted public company, and risk management company constitution is not applicable to you under the Companies Act or under the listing regulations, but still you have to constitute the committee.
Correct.
Yeah. So you have to appoint independent directors. That's it.
Someone is asking a book for the corporate restructuring.
Which one? Corporate book on?
Restructuring. Suggest a book for corporate restructuring.
See, there are several books are available. If I am not wrong, Dr. Chandralatya's book is there on corporate restructuring, which was, of course, there is an old edition it was. There are several books available on corporate restructuring, sir. But again, the same thing, all these books have become old.
Yeah, that is
under the latest Companies Act 2013, very less commentary is available.
Correct.
But however, to a large extent, the fundamentals are the same. So you can refer to the old commentary wherever you want to have an in-depth study of the subject concerned.
Correct.
Appreciation comes to you, Sudhakar, motivating the new members in the private company. Thanks a lot. People are expressing what your initial remarks, what you actually said. Which are the other regulatory authority compliances will be applicable to NBFC companies?
The other one will be the Financial Intelligence Unit, because the NBFCs have to comply with the Prevention of Money Laundering Act. That is one, and other than that, RBI basically. Yeah.
So if your company is a listed NBFC company, obviously there will be three regulators who are governing you. One is Ministry of Corporate Affairs, second thing is Security Exchange Board of India, and third thing is RBI. And which are the compliances I have to go for? You have to go for whichever the compliances of the regulator on the higher pedestal. Suppose two regulators are giving you some exemptions, the third regulator is not giving it, so you have to comply with the third regulator, and vice versa.
I think that's all the questions which are there. We can move forward. Yes, Rushabh.
So the RBI issued guidelines for appointment of statutory central auditor, statutory auditor for non-banking financial companies. So they have given the basic eligibility for appointment of statutory central auditor or statutory auditor. So they have bifurcated these limits on the basis of asset size of entity on the basis of financials of previous year. So if NBFC is having asset size up to 1000 crore, in that minimum number of full-time partners associated with the firm for a period of at least 3 years should be 2. So now let us understand what exactly full-time partner here actually means. So in order to become full-time partner, at least the partner should have at least 1 year continuous association of partner with the firm for considering it as a full-time partner. So means the partner must be associated with his firm for at least 1 year to consider him as a full-time partner. Out of total full-time partners, minimum number of fellow chartered accountants partners associated with the firm for a period of at least 3 years should be 1. Minimum number of full-time partners paid CS with CISA, that means Certified Information System Audit qualification, should be 1. But it is not mandatory for NBFCs with an asset size of up to 1000 crore. Minimum number of years of audit experience of the firm. For NBFC with an asset size of up to 1000 crore, it should be 6. And minimum number of professional staff should be 8 in this case. So likewise, they have given bifurcation.
Yeah, here I'd like to emphasize few points that this guidelines for appointment of auditors issued by RBI, as Rushabh mentioned, these are applicable to the companies of certain size basically, and it is joint auditors and it has to be for a period of 3 years. Unlike the Companies Act, which provides for 5 years, here it is the tenure of the auditors is for 3 years. And unless the company appoints the auditors on the same year, every second year or third year, one firm would get rotated out actually. That the company has to be mindful of. And the company is supposed to have a policy on appointment of auditors when these guidelines apply to them. And for companies which asset size of less than 1000 crores, it is optional for them to follow these guidelines. However, in case they don't follow these guidelines, the partner has to be rotated every 3 years. Maybe under the Companies Act, they will be able to appoint for 5 years. If that is the case, the signing partner has to be rotated every 3 years as per the master directions. Go ahead, Rishabh.
Somebody is actually putting a question to you.
Yeah.
How is the personal relationships or contract works with the RBI official in case of the non-compliance or penalty?
See, the difference between the other, especially the MCA and RBI, is that in terms of MCA, when they don't come for an annual inspection, it might be, happen on occasions. And in case they find any non-compliance, it straight away leads to a show cause notice and the process follows on. In case of RBI, during the annual inspection process, they also review the level of compliance which the company is into, and they do give suggestions and advisory to improve. It all depends upon the nature of non-compliance. If it is just procedural, something which is not very substantial, they highlight it to you. They give you time to course correct, and then they verify that and then leave you there. If it is very sensitive or something which is very critical for them, like KYC, FPC, Fair Practices Code, and in some of the governance areas, if it is a critical item, they do go for a penalty.
Not only that,
one thing I can say that, Sean, is that in case of RBI is concerned, there are no nonsensical persons.
Correct.
Okay, so that's why it is better to be that you cannot think, okay, I will develop a friendship or this kind of things. Of course, we cannot discuss that much more than this in the open forum like this. But something I can definitely say that as far as RBI is concerned, they're very stringent about the things, as Bala sir rightly mentions every time, that I can tell you this much, they are no nonsensical persons. They may give an opportunity of hearing to you,
right,
but if you are not able to convince them as far as your compliances are concerned, they may give you a benefit of doubt, but beyond that, they won't help you much.
Not only that, in case of the Companies Act, what happens is the various penalty sections are already prescribed. These are the penalties, these are the penalties, there are some penalties. But when it's come to the RBI, in fact, the penalty can vary even from the number of factors which are actually present, the volume which is involved. They may levy 3 times, 5 times, 8 times, like that it has come. Because I have come across in few cases where the very severe penalty has been levied by the RBI as well. So one has to be very, very careful when it comes to the RBI compliance system.
See, in fact, one of the reasons, why the stringency with RBI is there, I can maybe, because the impact of the non-compliance of an NBFC company and impact of a normal under the Companies Act, it is entirely different. The impact of an NBFC is much more than an impact of a non-compliance of a Companies Act provision is concerned. That might be one of the reasons why the rigor of RBI is much more than the rigor of MCA is concerned.
Right.
There is somebody is actually putting a question. If we are actually covering the CGO appointment discussions here, one of the aspects is CGO should have the clear track record. Nowadays, RBI have levied penalties on various cooperative banks, not the NBFCs and as well as the bank. Is that meaning they will not be having a clear track record? I don't think this question can be answered often like that, because much will depends upon the facts and circumstances of the cases. Because generalizing, how can be one answer track record, not track record? What do you say, Sudhakar?
Yeah, I agree with you.
One has to go into the details of the order, and though the CCO is considered as the chief compliance officer, he's also dependent on various functions, adhering to the respective compliances actually.
Yeah, unless we know the full facts and often we cannot give the answer. Yeah, go ahead, Rushabh.
Yes. So now let us talk about maximum number of statutory central auditors and statutory auditors which the NBFC needs to appoint. Actually, these limits have been prescribed to ensure that the number of auditors which the NBFC appoint are adequate or they commensurate with their asset size operations of the entity. So basically, they have bifurcated this on the basis of the asset size. For NBFCs having asset size up to 5 lakh crore, a maximum number of statutory central auditor or statutory auditors can be 4. Likewise, they have made the bifurcation. So now the additional consideration which the NBFC needs to adhere at the time of appointment of the auditor. So the audit firm need to be duly qualified under section 141 of the Companies Act 2013. It should not be debarred by any of the government agency, RBI. The appointment should be in the line with ICAI's code of conduct. Auditor for entities having asset size above that particular limit should preferably be experienced in computer assisted audit tools and technique and audit software. Last one is, if any partner of audit firm is director in any entity, the said firm shall not be appointed as auditor of any of the group entities of that entity.
For bigger NBFCs, these guidelines have created some peculiar issues, like especially when the company has P or VC investors, or it belongs to a bigger group, they usually look at either Big 4 or Big 5. So in one way or the other, these firms render some other services to these companies. So there is a limited choice of auditors in terms of Big 4 or Big 5 nowadays for these bigger NBFCs actually. Yeah, go ahead, Rushabh.
Yes. So now tenure of the audit. So the auditors appointed for in this case, no requirement of prior to conduct. Only audit firms are required to be appointed as joint auditor, and there should be no common partners between such firm, and they should also be not from the same audit network. Statutory audit policy and appointment procedure. NBFC need to formulate a board approved policy for appointment of statutory central auditor or statutory auditors. This policy need to be hosted on the official website of the entity. Minimum 2 audit firms need to be shortlisted for the appointment of audit firm. Eligibility certificate to be obtained from the prospective auditors before their appointment. No prior approval is required for appointment of statutory central auditor or statutory auditors. Just they need to inform RBI regarding the appointment within 1 month from the date of appointment, and the audit firm to comply with the declarations given at the time of the appointment.
Yeah, this eligibility criteria, this has to be reviewed every year by the audit committee actually. So what we do is that we do get a confirmation on the eligibility every year, and this is being put up to the audit committee. Audit committee reviews and records this as a part of the deliberations, which RBI also inspects during the inspection process.
There is somebody is actually putting a question. Please throw some light on business correspondence and also FLDG class. I think FLDG class means it is something like a first loss deposit guarantee or something like that. Okay. Especially for the gold loans, the BC concept is getting more relevant. Please explain the roles and responsibilities of the NBFC and the BC.
See, business correspondent is basically, sometimes the NBFC acts as business correspondents for the banks, wherein, they source loans for the banks. And sometimes, NBFCs also appoint other smaller NBFCs as business correspondents, wherein they source loans for the bigger NBFCs. And this first loss default guarantee is, nothing but, whenever the customer is sourced by another agency or, business correspondents, any first loss which is arising out of that loan is guaranteed by these BCs, business correspondents, basically.
Okay. Rushabh, go ahead.
So now let us talk about risk-based internal audit regulations, which the RBI have issued white circular dated February 3, 2021. So now the applicability of risk-based internal audit regulations. It will be applicable to all deposit-taking NBFCs irrespective of their asset size, and all non-deposit-taking NBFCs having asset size of rupees 5,000 crore and above. So now let us understand what are the objectives and scope of risk-based internal audit regulations. First one is audit methodology. Risk-based internal audit regulation describes an RBI as an audit methodology that links an organization's overall risk management framework, and it provides an assurance to the board of directors or senior management on the quality and effectiveness of the organization's internal control, risk management, and corporate governance, which the NBFC follows. Second one is contribution to the overall improvement. It contributes towards the improvement of organization's governance, risk management, etc. Third one is evaluation of risk management system and control procedures. Fourth one is independent risk assessment. NBFC should undertake an independent risk assessment for the purpose of formulating a risk-based audit plan. So expectation on the roles and responsibilities of different functionaries under internal audit framework. Board of Directors and Audit Committee. So Board of Directors are basically responsible for overseeing the internal audit function, review performance of RBI. For this, they should formulate and maintain a quality assurance and improvement program that covers all aspects of the internal audit function. Now, there are also some of the responsibilities of senior management. They need to ensure adherence to internal audit policy guidelines as approved by the board or audit committee. They need to also submit a consolidated position of risk faced by an organization to be presented annually to the board or the audit committee.
See, this internal auditor review of performance, it is usually done annually by the audit committee of the board at its annual accounts meeting as to whether the audit plan as per the risk-based internal audit has been complied as per the plan, and they review the performance and record their observations on the performance of the internal auditor. RBI also expects to see this remarks of the audit committee as a part of the deliberations when they come for the inspection. And again, from the RBI standpoint, internal audit is seen as an independent function within the company, though the the circular also specifically says that though he may report to the MD and CEO, he ultimately reports to the audit committee. And that is the reason the circular also mandates the internal auditor to have a meeting with the directors of the company without the presence of senior management actually.
Normally, where we were actually working, the internal audit report, although has been issued and other things done, he used to be invariably asked to be present at the audit committee meeting, and people used to interact with him on the various issues and other things and all before the audit report is actually taken on.
Correct. Internal auditor, attends the audit committee meeting. In some companies, they also inviting for the risk management committee meeting. Go ahead.
That is what I said, Sudhakar, in the beginning. That later 5 years of my working with the private company and unlisted public company have a greater exposure than what I was working in a listed company. Yeah. Yes, go ahead.
So now let's talk about key attributes of internal audit function. The following key attributes need to be observed. First one is authority, stature, and independence. The head of internal auditor must be a senior executive and must have ability to exercise independent judgment and professional judgment. Competence means the auditor must have requisite professional competence, knowledge, and experience of internal auditor. Here is must. Tenure for appointment of head of internal auditor. He must be appointed for a period of 3 years. And one thing I would like to draw your attention that
yes, please.
Yeah, there is no such specific professional qualification given for the appointment of internal auditor.
See, this internal auditor should also audit the systems and process which are critical business processes, and he has to report such audit observations to the IT strategy committee of the company also. Go ahead, Rishabh.
So now let us talk about compliance function and role of Chief Compliance Officer. This RBI have issued circular on April 11, 2022. So applicability of framework for compliance function and role of Chief Compliance Officer. Firstly, I would like to draw your attention that compliance officer here in this case need not to be a company secretary. He need not to be mandatorily a company secretary. So now let us talk about applicability. This framework is applicable for NBFCs in the upper layer and NBFCs in the middle layer. Framework for compliance function and role of Chief Compliance Officer. Scope and coverage. Statutory and regulatory requirement. Responsibilities of compliance function. Chief Compliance Officer need to assist the board and senior management in ensuring the compliance applicable to the NBFC. Chief Compliance Officer plays a central role in identifying the level of compliance risk in the organization. He acts as a nodal point of contact between NBFCs and the various regulatory authorities applicable to such NBFC. Compliance policy of the NBFC. This policy should ensure coverage of the following aspects. Independence compliance function. It should focus on regulatory and statutory compliance requirements. It should act as a monitoring mechanism for compliance testing. No dual heading. It means there should be no conflict of interest amongst the responsibility of Chief Compliance Officer. He must not be a member of any committee which creates conflict of interest.
See, here dual heading means actually the person should not be a part of the business team, or he should not be heading some business function and then also be a CCO. Suppose I saw one question whether the company secretary can be a compliance officer. In my view, there is no restrictions. In fact, some of the upper layer companies have appointed the CS as the CCO also.
Yeah, company secretary can be a compliance officer, but it is necessarily not mean only compliance. The company secretary to be a compliance officer.
Yeah,
that is what Rushabh said actually.
Yes.
Yeah. Yeah.
No. appointment and tenure of Chief Compliance Officer. He should be appointed for a minimum of 3 years. He should have clean track record and high integrability rank. He should be senior executive of non-banking financial company with a position not below 2 levels from the CEO. Removal. He can be removed before completion of tenure only in exceptional circumstances, that too with the explicit approval of the board or the committee.
Yeah, this CCO thing is a new thing which has come in effective from October this year, 1st of October, especially for middle layer and upper layer companies. This concept was always there in the banks, where banks always had a chief compliance officer. Over the period of years, RBI is trying to converge the regulatory, bring a regulatory convergence between the banks and NBFCs. And probably in the next few years, there will not be much difference between the regulatory environment for banks and NBFCs. And RBI is consciously trying to converge both, actually, considering the importance and the sensitivity of the NBFC in the overall financial sector. So having that in mind only, RBI has brought the CCO thing also for the NBFCs. And by and large, the CCO is responsible for monitoring the overall compliances within the organization and reporting it to the board or the respective committees. Of course, in an NBFC, each function has its own compliance. For instance, credit department has its own compliance of KYC, FPC. Finance department has the compliance of asset liability and liquidity risk and all that. So each of these functions carries out various compliances, and it will be the duty of the CCO to monitor and then advise the respective functions on the regulatory developments, and then give them guidance as to the interpretation and all that, and then ultimately report to the board and the committee. This is what seems to be the RBI expectations from the CCO.
See, not only that, Sean, as you rightly said, in case of banks, they have this chief compliance officers. But most of the times I have seen that company secretaries are not the compliance officers. One of the reasons might be this is a specialized function, number one. Number two is it is mostly linked with the finances and all that. So I have seen in some banks, the chartered accountants are the compliance officers, basically. And in fact, if you see that in telecom companies, they call this thing a chief regulatory officers. They don't call as compliance officers, but they call it a chief regulatory officer. So there what happens is that instead of the company secretaries or chartered accountants, mostly the chief regulatory officers are from business side, who understand the business very well, because there the regulatory compliances are much, again, the same thing, much beyond your RBI, SEBI, and because the tri-compliances are much more than the other three regulators, which we are discussing as of now. Right. So it all depends upon that, though there is no bar as such for the company secretaries, but big size banks and all, I have seen some of the banks are having the chartered accountants as the compliance officers than of the company secretaries.
Correct.
In fact, in the company where I was working, we had a company secretary separately, and the compliance officer was actually one of the banking background senior official. He has been actually appointed. RBI demands, the suspicious activities under the anti-money laundering issues, etc., and all this thing, for which purposes this was the case. That is why they brought the people with the banking experience. They have made him as a compliance officer. Yeah. So you have come to the end of the presentation, Rushabh?
Yes, yes, sir.
I think in the chat box, the company secretary can be a chief compliance officer. I think that we discussed actually.
Yeah.
Can CCO operate of NBFC like signing the checks, online payment, etc.?
Who is that? CCO?
Yeah, chief compliance officer.
Why not? If he
Why
has-
not? If the authority is given to him, he can. Why not? He is also one of the senior officials. The authority is given by the board. Definitely he can act. I think.
It is left to the internal management. Probably, it depends upon, how the management
Yeah, correct.
hierarchy is structured. For example, in some of the companies, CSR payments are approved only by the company secretary. So it depends upon the, the
It's
kind
working.
of.
I don't know. We'll have to check. One check. I think there are no more questions are there in the chat box. One more thing has come now. In case of the small private limited company, NBFC and obligations are also necessary.
The moment you are an NBFC, whatever band.
Yeah, that is right.
Come
Whether
under
it is small or big, it is NBFC automatically applies. Yeah.
whichever asset size you come under, whatever relevant regulations applies to you, one has to follow.
See that, in fact, in NBFC companies, number one, it is deposit accepting or non-deposit accepting. So in case of non-deposit accepting, the rigor is slightly lesser. Then it comes upper layer or lower layer. Middle layer, I think. Okay, again, the same thing. Depending upon the layers, your rigor will be there. And then the third thing is that asset size of the company. These are the, I think, the clear demarcations as far as the compliances are concerned. But not it is the size of the, it is the what's called as the structure of the company, like private company, public company, listed, unlisted. It's not like that.
Someone is again asking for the suggestion of the book on SEBI LODR regulations.
SEBI LODR, you will have to refer to the SEBI website. Maybe there is one book by Mr. Chandratre, you can refer that, but it will still keep changing.
But as you rightly said, even when you refer the book, regulation keep on changing every day. One has to get updated. This cannot be a static simply following the book. The better thing is to go by the regulatory site itself.
In fact, after the new Companies Act 2013, I think people have started relying less on Ramayana now, actually.
Yeah.
Yeah, Ramayana used to be Bible be always there on the desk. Nowadays, looking at that also has, decreased to a large extent, actually.
See, because Sean, one of the reasons for that is earlier there was a static Companies Act was there, which is now a very dynamic and quite evolving act. And this is evolving every day. Number one. Number two is that the complexity in the present existing law is much more than what it was at one point of time.
Correct.
So, second thing is that a lot of scope is there for interpretation, and the regulator sometimes, with all due regards to them, they themselves don't know how they have to interpret it.
Rushabh, you can stop sharing the screen.
Yes.
So because of all these things, that if somebody is asking that, if you go and ask for a bookseller, there was a WhatsApp joke also, by that, can you give me the updated Companies Act? Then he will say, what is meant by updated? You say. Though, in fact, some of the professionals, they did try to bring some kind of a comment, and also they have given up now because it is very difficult. For example, some company secretaries started maintaining some kind of a website or something like that, where they are putting the Companies Act and they started giving some kind of interpretation and all. Then subsequently they have given up, because there's so many changes. So it is unless until you are online and 24/7, then that your this thing will be. You will lose your image.
At post 2013.
But one good part is MCA, the Companies Act, Online Companies Act, in the MCA website, it is updated 24/7.
Correct.
It is an excellent way of doing this thing, and that I must appreciate as far as Ministry of Corporate Affairs is concerned. And whether it is the rules or whether it is this thing and all, very easy to maneuver, very easy to put your finger on the requisite place. And they're also keeping a track of all the previous changes also, very meticulously they are doing it.
In the
colors,
particular section itself, there is a URL, you can click that and go to the rule form and all.
You can download that particular section also.
Correct.
You don't need to download the entire act. If I
Correct.
want to download the particular section and I want to make my own notes and other things, I can do that also, you know.
Correct.
So
correct.
it's quite
Had
friendly.
it
It is
not
quite
been there,
friendly.
our life would have been hell actually.
Yeah, true.
Tracking all this.
And same is the case with listing regulations also. From periodically, they are updating that. So, I mean, regulators from their side, they are doing their best. You know, I have no issues as far as they are concerned. So it is up to the, I mean, on our fraternity colleagues are concerned, we have to keep a. Only thing is that we should know how to navigate through the regulators' websites
Correct.
quite frequently and all, you know, and then there is an issue. Good. And if there are no more questions, I think Bala, you may conclude the meeting.
Yeah, I
And,
think we can close the session.
the only
Let
before you conclude the next webinar, we are going to discuss about the prudential norms for the systemically important deposit accepting companies, at the same point of time systemically important non-deposit accepting companies. And next week is going to be a very, very important this thing, because prudential norms are the virtually the fundamentals of any NBFC company compliances are concerned. No doubt today is the corporate governance compliances and the internal audit thing is concerned, but next week webinar is going to be on the prudential norms. That is the actual business when you are conducting it. It depends upon that, whether it is your net owned funds, whether it is your reserves, what you have, tier 1, tier 2, and all the other things, you know, okay, which will be coming in. We will discuss it next week. That, and I have requested, and Sean has kindly accepted that next week also he is going to be the panelist for that discussions also.
Yeah, very great, very great.
Yeah, and Sean has agreed for that, and he will be bringing his expertise as far as those prudential norms are concerned. Yeah.
Shanmugam, delighted to hear that.
Yeah, thank you. Thank you, Mehta and Mehta, for the opportunity to share my experiences to the other fellow members.
Let me take the opportunity of expressing my appreciation to Rushabh, who has extensively put his work and done the homework and nicely presented everything in a very lucid manner. The orientation also very good. My appreciation to Rushabh. Great job you have done actually. Mr. Shanmugam, excellent, you know, sharing of the knowledge, various clarification from time again, what you have been given and adding things. Really speaking, it is really a enlightening, value-adding session really. Sudhakar, I will not separately thank you at all because you are evergreen person throughout the seminar. Because already there are people are expressing so many things. So I won't separately express myself, which I have my own regards to you, Mr. Sudhakar. So with this, I think we will take an opportunity for thanking all the participants and all our panelists and also the presenter. It's a very wonderful session. Really, I personally got benefited. I am very sure the delegates also got definitely benefited. Let us meet the next session, which is going to be very, very important. Thanks a lot. Have a good day. Good weekend. Thank you.
One point I would like to make is, though the Mehta and Mehta webinars are pretty long, more than 2.5 hours, I don't feel like we ever get bored as to when it will complete, or I still people, 72 people. I think it started about 90. Still 72 is a good number at the end of a session. So that goes saying that people
started with 90 and reached 107 today, and then again now it is 72. But anyway, that's good. Thank you very much, Shan. Thanks once again. Thank you, everyone.
I would also like to thank all the panelists, Bala sir, Sudhakar sir, Shan sir, for motivating me to present today's speech. And I would also like to thank all the attendees who attended the session.
Thank you.
Thanks a lot. Thank you. Good weekend.